Welcome back to FANG Fridays. I'm Gilbert Ananajur, Senior Equities Research Analyst here at Strategic Analysis Corporation. Ross is off this week. And what a week for him to be off. We had all the FANG stocks gyrating up and down throughout the week. Much of it was because investors were unsure as to how the trade resolution was going to come about. We saw on Sunday Trump tweeting that tariffs were going to be increased, and then we saw negotiations continuing on throughout the week. In this video, we're going to take a look at the 6 FANG stocks that we cover and see if the SVA charts are telling us anything important about where these stocks are and where these stocks are going to go, independent of any trade talk news. So, let's get into it. We're going to start off here with Facebook. This is the standard SVA chart, and we can see that after bottoming here around the fair market value line, Facebook went up, and after its most recent earnings report, which we can see when we go in closer, it jumped above the MSG price. Since then, it has had trouble and has struggled to get any much higher, and this week we've seen it dip below the MSG price. Today, it closed just around that price. What does this tell us? Well, this could be what's known in SVA as a faux break. Effectively, when we look at SVA charts, when we see a break of one of the trend lines, of one of the break points, usually this means that we're going to see further prices down, as we see here. However, in some instances like this, we have what's known as faux breaks, where the stock breaks above a major break point and then comes back. If this is the case, this might be it for Facebook. We're going to keep looking at this stock because it's very interesting for us. Our next stock is Apple. Now here we have a similar case. Apple, since the December lows, has been moving higher, and after its most recent earnings report, we saw this big jump off of the fair market value line. It wasn't able to get up to its BB price, which is a significant bubble price, and has since turned down and is back at its fair market value. Generally, Apple stock is contained by its fair market value and doesn't go much higher. We can see here in 2008, when we had the blow off top and we had buybacks and Warren Buffett saying that this stock is underpriced at 230, we saw a break above the fair market value line. Since then, it has dropped below and it has rebounded. However, we think that this turn might signal the end to this rally. If we take a closer look, we can ask ourselves if this rally is a sustainable one or if this is simply a bounce coming off of the December lows. We're going to keep an eye on Apple. We've advised our clients to take some profits here because generally Apple doesn't break much higher than its fair market value line or its bubble price. Let's take a look at Amazon. Now we can see Amazon is very, very highly priced at almost 18 times book value. If we look closer, we can see that it bounced right off the HB3 and oozed its way up, however, has been unable to get up to the HB4. The trend is still intact, and it is still possible for it to get to the HB4, as it did here. However, if we can see this turning down, and I'm going to remove the fair market value line here because it's very, very low. We can see this bounce here, and we can see it moved up, but it's since turned down this week. If it continues to turn down, this would be a false rally. This wasn't a rally that was meant to go to HB4, but instead was simply a bounce, and we should see a move back to the HB3 price at least, which would be about 20% drawdown from its current price. Looking at Netflix, we've been tracking this stock for quite some time, and we think that we're finally going to see what we've been saying is going to happen for some time. again, let's remove the fair market value line. We can see that after the December lows, it popped right back up to the HB5 and has been struggling to break above it. We can see on many occasions it came up to it and was rejected. Rejected and rejected. When we see this in SVA charts, what it typically means is that this is the ceiling. The stock is either going to break above it with conviction, or this is basically it for Netflix. If that's the case, we should expect a move to the HB4 price, or even possibly the HB3. This is not out of the question, as this has happened before. In fact, the stock went from the HB6 to the HB3 in 2018 in the course of about 5 months. It's very possible that we can have a 2 breakpoint drop in the course of 2 months. We're going to keep an eye on this stock. Nvidia is one that we've been tracking for a long time. When it broke this HB3 line, one that had held for quite some time, we knew that this overpriced stock, which was at 10 times, which is currently at 10 times book value, but before was at significantly higher multiples, was going to come back down and likely test its bubble price, which it did. Since then, it's been bouncing along, tried to get up to its HB2 price, however, has slowly rolled over and is now looking at the HB1 as a very good target. While this may be a bounce area, we think that it's very possible that Nvidia could go all the way back down to its BB price and possibly lower. If we look long term, we can see that this current move in Nvidia was a massive bubble. If we look at the all-time chart, we can see Nvidia has had many bubbles before. This is the dot-com boom, this is the 08 crash, and this is right now. Nvidia has rarely moved above the bubble price without breaking back down, and in both times, it went at least to its G price. What that would mean is that the current price, 170, as a starting point, would see the G price as the target, meaning the stock could lose up to $150 or more of its value. Finally, let's take a look at Alphabet. Well, there's not a lot to say here. Let's take a look at the 10-year chart. We can see that Alphabet has been a growing company. It's very well managed, provides a good service, it's expanded. However, it usually lives within the range of the LSG price, which is this second yellow line from the top, and the SG price with a few breaks below. More recently, after its earnings, as it attempted to break above the LSG price, the earnings report rejected it. Such a strong rejection on SVA charts usually means that the stock was not ready to move higher. And indeed, the next price level that this stock will reach is likely to be the SG price, which is just under $1,000. This would not be out of line with the history of Alphabet, as it has reached the SG price many times, and often at the end of nice market bubbles, be they short or long. We think it's probably time for this company to come back and check the SG price. Well, that was it for this week. We think the next coming weeks are going to be very interesting for stocks. SAC clients have access to over 4,000 charts that look at North American equities and get analysis just like this every single day. If you want to learn more, head over to www.strategicanalysis.ca. This has been Gilbert and Anajor for FANG Friday. Take care, and we'll see you next week.